You all will be agree with me. The budget this year is one of the best ever I had seen in my tenure of 35 years. Why is one of the best? Because the when we have seen the budgets in our golden days, the limit of increase in threshold limit maybe 5,000, 15,000, 25,000, at most 1 lakh maximum. But this time from 7 lakh threshold limit has increased to 12 lakhs. And that too, the incremental income has raised from 12 lakhs to 16 lakhs, 5%, 16 lakhs to 20, 10%, 20 to 24, once again, in range of 5% they have increased. The way in which the money will be available for spending or for propensity to consume, we say that it's really, it will be high, and it will be a sea change. The way in which economy is going to develop on the basis of this is the efforts, the results of this we can see in the next year onwards, because government want to be a pro people for the middle class. I think she has given one liner, good news for middle class persons, and really it is a good news. And many of experts have given 9 out of 10 marks to this budget. And for doing ease of doing business, definitely it is going to be very, very good. The way in which in last 10 years, if you see the way in which data is available to the government, 26 AS, AIS, you will find out that much of the information is definitely with the government. Our GST Connect link of GST entire is with Income Tax Department. Then all our shares transactions more than 50 lakhs, always there is with the about 30 lakhs is there, but by virtue of TDS, 50 lakhs also is there. And you all must have agreed that many of the clients have getting the notices from the department on the basis of this information which is there. So now message is very clear, be transparent. As far as tax practitioners are concerned, we have to go through the entire list of the accounts which are there reflected in the AIS minimum, that is bare minimum. Over and above, there may be non-scheduled banks information also will be there, that has to be taken care of. So that my humble request to each and every tax practitioners to look into that very thoroughly. And for that, we have very eminent speakers. I'm very glad that I'm sharing. It was a dream, my dream, that sharing my dais with Vikram Mehta ji. We were when we started the practice, they were our speakers, and my colleague, my good friend Shekhar, also is there. Both speakers are very good friend of us, and yes, together we are together. And thank you very much that you have accepted to address us, sir. With this, I once again hand over discharge to the convener. Umang, please. Thank you.
Thank you, President, sir. Before we begin, there are small announcements which Jatin Bhai, our Joint Secretary, wants to make, and then we can proceed with the meeting.
Thank you, Umang. The small announcement in the relation to the future events of our associations. So since everyone knows that we have started our flagship program of our English coaching class, which has been started, and few lectures only have been completed. So I request everyone they kindly enroll their staff so that it will be beneficiary for them to get the benefit of the coaching class developed by the GSTPAM. And the coaching class has been designed in such a way that in-depth knowledge and everything has been shared to the students. So kindly enroll for that. And we are coming out shortly with a coaching class in the Gujarati. So I request everyone to enroll for the same thing. Second thing, on to 22nd February, we are coming out with a half-day seminar in the Mysore Auditorium, which is in the Matunga. The topic for the same are the budget panel discussion on budget proposal, along with the input service distribution and the importance of the IMS. So I request everyone to kindly enroll for the same. Second thing, GSTPAM has started the membership for the student end. So I request everyone kindly enroll their articles in the GSTPM as a student members. So they will get the same benefit what the members are getting. Articles, I'm saying articles. So the articles are always a 12 pass. So kindly enroll for the same so that they will get all the benefit what the members are getting. Students also. Students also. So I request the same thing. So with this, I'll hand over the mic to the monarch, but to kindly introduce the today's speakers. So over to you, monarch. Thank you. Thank you, everyone.
Good afternoon, friends. It is my pleasure to announce a speaker for the today's topic of direct and indirect tax budget proposals. And I call it as a super duper budget. So for today's session, we are having two eminent faculties. One is on the direct tax proposals, that is CA Shekhar Patwardhan. He is a chartered accountant and practicing since last 25 years. He is a partner in MSVP and Associates, having their offices at Thane and Dombivli. He is specializing into handling the income tax appellate matters. He is also actively involved with the various committees of ICAI and WIRC. He is also philanthropic in nature and he is a managing trustee and secretary of Sadhguru Shri Dada Ranade Charitable Trust, where they provide medical and educational aid to the needy people. He is also expert trustee of Shri Siddhivinayak Mandir, Titwala, and he has contributed various guidance notes on Income Tax Audit 2022. He has also contributed for the Finance Bill 2024, which has been published by WIRC, and we are sure that what the income tax bill which has been presented today in the House, we will also have a note from our today's speaker, Shekharji Patwardhan. With this introduction, let us welcome Shekharji Patwardhan. Now I request our president to present a memento to the today's speaker, Shekharji. Now, friends, we are also having a discussion on the indirect tax budget proposals 2025, and our today's faculty for that is Vikram Mehta. He is a fellow chartered accountant with diploma in information system audit, and he is practicing since last 25 years. He is a partner in charge on the indirect tax at the DR Mehta and Associates. He has been worked as an editor of our sales tax review. He is a past chairman of Indirect Tax Committee of Chamber of Tax Consultants. He is currently also active in our committees, and even in the past, he was a part of the committee. He has presented various papers across the many of the associations, and he is a regular faculty at all the associations. So with this, let us welcome Vikram Mehta. And for this, I request our chairman, Sujata Madam, to present a memento. Now I request Umang to proceed with this. And yes, of course, we would like to wish Vikram Bhai Mehta for a belated happy birthday. It was his birthday yesterday. So it was yesterday. So it's good that our session was not yesterday. Otherwise, we would not have a chance to listen him yesterday.
After this, we can start the. Shekhar ji, I request you to start the proceedings. I'll request the dais to please. मैं शेयर कर रहा था उनका ये है ना हाँ चलिए
Good afternoon, everyone. Thank you, Monakji, for the nice introduction. Respected President of the GSTPAM, Maheshji, and the dignitaries of the dais, seniors in profession, and friends. This year, the background of the budget, it was completely different. The moment the finance minister started speaking, she talked about the new income tax act that is going to come even before she started about the budget proposals. And she said, why new law? She said, at present, a lot of litigation is happening. Now, why that litigation is happening? Litigation is happening because she said the present law is complex. And that's why after 60 years or so, we need a new law. That is fine. But any law, any tax law in the country is concerned, it is very interesting how that law gets evolved. See, when the Income Tax Act must have been introduced in 1961, the new act, it must have been a simple law only. Later on, a lot of provisions got added, a lot of provisos got added. A lot of definitions also got added, and then it became a complex law. laws in the country are complex because people in this country are complex, are not simple. GST was also started with the same intention. But today we see that GST is the greatest area we see as far as the litigation is concerned. So let's see what happens as far as the new income tax law is concerned. Now coming to today's topic, this year, by and large, all the amendments, in fact, are welcome amendments. Last 5 years or so, the rates of the TDS and the TCS are concerned, and the scope of these provisions, it was increasing. And for the first time this year, there has been a reduction. And that's why I'm saying there is a complete change in the approach. So today, as far as today's presentation is concerned, we are going to talk about the tax rates, then the various amendments in various heads of income, then amendments relating to exemptions and deductions, then the changes in the TDS and TCS, amendments related to charitable institutions, the assessment procedure, and the other amendments. You know, before I start the presentation, I always start with the overview of the tax collection. So just see the figures where we were in 2013-14 and where we were in 2022-23. From 6,38,000 crores, it is 30,54,192 and 192 crores. As far as year-to-year figures are concerned, if you compare the actuals of 23-24 with the budgeted estimates of 24-25 and then revised estimates for 24-25 and even the budgeted estimates for 25-26, clearly you can see 4 lakh crore is the direct increase. And in terms of percentage, this increase is 15%. So year by year, as far as the revenue of the government is concerned, it is increasing by 15%. A normal salaried person, the increment may not be 15%. As far as our fees are concerned, it's a good point to tell to our clients that year by year, at least 15% increase has to be there, seeing the figures of the government. And of course, as Maheshji said, technology has played a very important role in this, no doubt about that. And with this buoyancy, the government is confident that they are going to reach their targets. And that is how, for the first time, as I said, there is a change in the approach. Now, this is something very interesting. See, when we started learning the income tax law, the basics in taxation, the Chanakya Niti says that taxes should be collected the way honeybee collects the honey. And so far as the individual taxation is concerned, the basic exemption limits are related with your per capita income. Now, just see the figures given of per capita income In case of United Kingdom, France, Germany, and USA. These countries, we say, are the most developed countries of the universe. Just see where is their per capita income and where their basic exemption limits are. Nobody is giving basic exemption limits up to the per capita income. Just see how much difference is there. Take an example of UK. Take an example of USA for that matter. And just take an example of our country, which is a developing country. The per capita income limits are 2,22,000, and we are talking of a basic exemption limit of 12 lakhs. Now we will come to the reasons behind it. Of course, I'm not talking the political reasons. Political reasons also were very much there. And that is known to us with the Delhi election results. But I'm not going into that. See, 3 years ago, when this concept of new tax regime and the old tax regime, it was introduced, it was very clear that one fine day, very shortly, the government is interested in saying goodbye to the old tax regime. It was very clear. Now, what are the reasons? Let us understand the reasons behind that. From government side, the reasons were they were not having, the simple reason was they were not having the machinery to check your claims. What you are claiming under 80C, what you are claiming under 80D, and what you are claiming under 80G. They were simply not having the machinery to correct, to check your claims. And as we all aware, in many cases, the false claims were also being made. But let me tell you, in a country like us, life insurance and health insurance, these are the two sectors where the awareness is not there. The kind of awareness, the kind of facilities which the developed countries have, we don't have that. We don't have that awareness even. Still, many people in the country, we find that they were doing investment in LIC. They were taking their life insurance. They were taking even their Mediclaim because deduction was there in income tax. मेरे को कुछ नहीं होने वाला है, but I am doing it because income tax deduction is there. So from that point of view, that socio-economic point of view, actually the old tax regime was good because it was giving fillip to for the investment in the LIC and investment in Mediclaim. But as I said, the moment they brought it a couple of years back, it was very clear that they want to finish the old tax regime, and that is what they did. As I am getting this opportunity for the first time, presenting the budget proposals, but wherever I am speaking regularly, every year we are talking about this particular aspect. Last year we discussed about where the old tax regime and the new tax regime will give me the same results, break-even point we can say. But now the kind of limits which they have brought under new tax regime. We all know of 12 lakhs. With this, now even if a person is having a housing deduction, the 80C benefit, 80D benefit, 80CCC benefit, but that can't beat the taxation under the new regime. So that means, in a way, it's a goodbye to the old tax regime. Although it is there on paper, it's very clear that now nobody is going to opt for the old tax regime. As far as the rebate under 87A is concerned, you must be aware that there was a big controversy as far as the 87A rebates are concerned, whether 87A rebates can be availed as far as the long-term and short-term capital gains are concerned. And huge controversy started. We have filed the returns where the demand has come. And that's why that particular matter went up to the High Court. And Bombay High Court recently gave a judgment as far as the 87A rebate is concerned. See, your clients also may be asking that demand has come, what we are going to do. Many people ask me on WhatsApp that what about 87A? For that, let's spend 5 minutes so that everybody will be aware what has happened as far as the 87A rebate is concerned. Now, as far as the assessment year 26-27 is concerned, we all know that the overall limits have been enhanced from 7 lakhs to 12 lakhs. And 87A rebate has been increased from 25,000 to 60,000. And then such rebate of income tax is not available on tax on income chargeable at special rate, that is capital gains under 101A and 112. That is specifically mentioned in the explanatory memorandum to the budget proposals. It is not brought in the statute as such. It is not there in the act. It's not there in the 87A. It's not there by way of amendment, but it is just there in the explanatory memorandum. Now, as we are talking about the recent Bombay High Court judgment about 87A, so let us, as I said, let us spend few minutes on that 87A judgment, recent judgment of the Bombay High Court. See, it was a public interest litigation filed in the Bombay High Court, that nothing is mentioned as far as the short-term capital gains and long-term capital gains is concerned. Then why you are restricting us from taking the 87A benefit? So that is the idea. And for that matter went up to the High Court. Now, before the High Court, the prayers were as under. I will just quickly read out one or two prayers and what the Bombay High Court said. So there is a cause. Why this public interest litigation? The cause for filing the present PIL arose on 5th of July 2024. On that date, online utility provided by the respondents denied the assessee the benefit of claiming a rebate under 87A of the IT Act while filing online return against tax computed under various chapters. The respondent's utility permitted the assessee to make such claim before 5th of July. Petitioner number 1 and various other associations made various representations to respondents on the issue of utility not providing for making a claim under 87A, but having failed to get justice, have approached this court for redressal of their grievance. It is this denial on account of the modification of the utility on and from 5th of July 2024, which is challenged in the present petition. And now the prayers that the Honorable Court be pleased to issue a writ direction or order directing the respondents to modify the utilities for filing of the return of income under 139 of the Act immediately, thereby allowing assessees to make a claim of rebate under the proviso of under Section 87A in their return of income for the assessment year 24-25 and subsequent years. And then the High Court be pleased to issue a writ direction or order directing the respondents to make the utilities for filing the return of income online flexible so as to allow the assessees to self-compute income, and there should not be any restrictions on making of any claim whatsoever, and direct the respondents to not to release any utilities or make any changes in the utilities for filing of the return. Then further, they are saying take appropriate steps to allow a claim of rebate under 87A of the Act from the tax payable at special rate. And these were the prayers. And then what the Bombay High Court said on that, as far as the first prayer is concerned, they are saying that this court be pleased to issue a writ direction directing the respondents to modify the utilities for filing of the return of income under 139 of the Act immediately, thereby allowing the assessees to make a claim of rebate under 87A of the Act. So they are of the Act in their return of income and subsequent years. On one hand, they are saying this, whereas on another hand, they are rejecting the other, and also they are saying the issue of adjudication of eligibility of a claim under 87 by this. So after reading so many times, one is not able to understand what exact directions the court is giving. So that's why 87A is concerned now. If the demands are there, nothing is going to happen. Tell your clients to pay that and forget. Said they are bringing it by way of explanatory memorandum. They are not bringing it in the Act. Why they are not bringing it? Because then it is like accepting that it was not there earlier. That means they should give the benefit for earlier years. They are not accepting that, and that is why they are not bringing that in the statute in the 87A. Just they are saying by way of explanatory memorandum. So as far as, to summarize, as far as claim for 24-25 are concerned, I think nothing is going to happen on this count. It is better to pay the taxes and forget. Anyways, amount may be small as from the government side, but they are not ready to accept that something was not there in the statute. Then they should give the benefit. Now coming to the point that Mahesh sir was talking, and I have a different view on that. Just see in this chart, the various income levels are given, and the total benefit which the taxpayers are going to enjoy. So as far as the limit of 12 lakhs is concerned, the total benefit is 80,000 rupees and so on. Now, as far as the budget proposals, while the finance minister was talking on this particular aspect, she said that cost of this is 1,00,000 crores. Now, from where they are going to get that 1,00,000 crores, that is not clear. So the question was asked, if you are giving a benefit of 1,00,000 crore, from where you are going to make up that? So, as Mahesh sir said, the CBDT chairman also said, same question was asked to CBDT chairman. Then he said the entire benefit is about 1,00,000 crore. And the budget target this year is something. Therefore, the number of taxpayers is more. Ultimately, impact of this 1,00,000 crore being in the hands of people will have an impact on the economy. Business would develop. Once that is positive, then the economy also grows. Once it grows, it has a positive implication on tax revenues. So it will come back. It will come through companies. It will come through business income. It may come through as salaries, because if the company's income grow, their salaries also would increase. There would be a positive spin-off, they are saying. There would be a positive spin-off of this 1 lakh crore relief, and we are we are confident that we are going to grow at 15% per annum. So as Mahesh sir said, basically what governments wants to do is to spend whatever benefit is available in the hands. But my view is different. As far as if this is for middle class, then middle class should invest in the health sector, should invest in the insurance sector, because awareness and the kind of medical insurance people are having, that is very much insufficient, considering the overall standard of living in the country and the kind of medical expenses that are there in the country. So I feel if this is for middle class, then middle class should invest, not to spend. Spending is the idea of the government, but I differ on that. Now coming to the tax rebate, they are talking of this 87A rebate also. How the rebate is going to be available if you're up to 12 lakhs, they are saying the rebate is available, but the marginal relief also is available under 87A. So how that marginal relief is going to work? So let's see how that marginal relief is going to work. So for that, they have given formula how to calculate the marginal relief. So step 1, there are various steps are given. Let us try to understand it with the help of an example. So suppose if the income level is 12 lakhs 25,000, then on 12 lakhs 25,000, what is the marginal relief? So how we are going to calculate the marginal relief? So first step, subtract 12 lakhs from the income, that is 12 lakhs 25,000 minus 12 lakhs, the answer is 25,000. Then calculate the income tax liability on that 12 lakhs 25,000, and the income tax liability on 12 lakhs 25,000 comes to 63 lakhs 750. So this B minus A. So B minus A is your rebate under 87A. So if B is greater than A, the rebate under 87A will be B minus A. So that B minus A, that is 63,750 minus 25,000, that is going to be the rebate under 87A for the income level of 12 lakhs 25,000. Then another example, how if your income level is 12 lakhs 75,000, then again as per the formula, first 12 lakhs 75,000 minus 12 lakhs, the answer is 75,000. Then on 12 lakhs 75,000, the tax comes to 71,250. Now, as you can see here, the B is less than A. So when the B is less than A, there won't be any relief under 87A. In short, as far as the 87A rebate is concerned, up to an income level of 12 lakhs 75,000, 12 lakhs 71,000, sorry, we are going to enjoy the income tax rebate. So the moment your income level crosses 12 lakhs 71,000, you will lose all the rebates, and the normal taxation will continue. Then as far as the surcharge for the individuals are concerned, there is no change in the surcharge. So we'll not talk much on that. Then as far as the income from salary is concerned, we all learned, as far as the salary head is concerned, we all learned the concept of perquisites. Now for the perquisites, the moment the income is more than 50,000 rupees, the employee is called as specified employee. The employee is called as specified employee and the perquisites become taxable. Now this 50,000 is a very small amount. 50,000, it is not 50,000 per month. It is 50,000 overall. So moment that 50,000 crosses, the perquisites become taxable. So as we all know, this 50,000 is a very small amount. What the government is saying, we are going to issue a new monetary limit, and that monetary limit they will issue in due course. So obviously it's going to be much more than that 50,000. Similarly, if the expenditure is incurred on an employee for a medical treatment outside India, then the monetary limit for that is 2 lakhs. Now both those limits, 50,000 and 2 lakhs, both those limits they are going to increase, and the new limits will be prescribed. That is what they are saying. Then coming to the next head of income, that is income from house property. So as far as the income from house properties are concerned, 2 house properties can be claimed as exempt, but there were certain conditions prescribed for that. In the investigation, the famous Sachin Tendulkar case, where the department lost. So considering the fact that these conditions as such are not working, they decided to remove the conditions. So again, it's a welcome change, that now the conditions, all the conditions stands removed, and simply now annual value of 2 self-occupied properties can be taken as nil, and this will be effective from 1st of April 2025. Then as far as the income from business is concerned, they have introduced the concept of presumptive taxation. The presumptive taxation for the non-residents, they have brought a new section, and that new section is 44 BBD. So basically it is for the establishments who are supporting electronics manufacturing facilities. So the provision shall apply to non-residents engaged in providing services or technology to Indian companies setting up or operating electronics manufacturing facilities under the government notified scheme. So basically they are saying the taxes are going to be 25% of the turnover. And as far as the unabsorbed depreciation and brought forward losses are concerned, they are saying non-residents cannot claim the unabsorbed depreciation and brought forward losses. Then as far as the carry forward of loss in case of amalgamation, again, what has been observed, suppose one company is having loss and that is amalgamated into another company. The present law is the amalgamated company would continue to carry forward that loss for next 8 years. Now they are saying, if the loss, that loss-making entity, if we need to see for how many years the loss has been carried forward by that entity. Suppose that carry forward loss is there of past 4 years, then this amalgamated company can carry forward that loss for next 4 years only. That is what they are clarifying. So in case of amalgamation or business reorganization, amalgamated or the successor entity shall be entitled to carry forward the business loss or unabsorbed depreciation for 8 years from the year in which the loss was first incurred by the amalgamating or predecessor entity. So that is what that clarification they are bringing. The words used are evergreening of losses they want to curb. And that is why they are bringing these provisions. That is the intention behind making this amendment. Then extension of benefit of tonnage tax scheme to inland vehicles. So just we know that the concept of presumptive taxation is there for simplification of tax laws. That concept of presumptive taxation is there for the outbound vessels. But nowadays, this cruise concept has started within the country also. From say a cruise is going from Mumbai to Goa. So that tourism also has started in our country, and basically the idea is to give encouragement to that tourism, and that is why for the inbound vehicles also they are extending that tonnage tax scheme. Again, it's a simplification of the tax laws. Then very important amendment is there in capital gains. See, in case of unit-linked policies, the deduction is available under 1010D. So the present provisions are currently sum received under life insurance policy, including bonus, is exempt, provided the annual premium paid is less than equal to 10% of the capital sum assured. If that is the case, then the capital gains are, then basically the gains are exempt from tax. The exemption was withdrawn from ULIPs issued on or after 1st of April 2021 if the premium exceeds 2,50,000 during the policy term. Now, what they are saying is, if this is not exempted, then basically it is going to be treated as a capital assets, and they are including it in the definition of the capital assets. And that is how the way we calculate the capital gain in case of capital asset. Otherwise, the controversy was if the ULIP income is taxable, whether it is taxable under capital gains or whether it is taxable under income from other sources, that they are clarifying that it's a capital asset. And if the income is not exempt, if the criteria are not fulfilled, then that income is going to be taxable under the head income from capital gains. And the amendment is proposed to take effect from 1st of April 2026. No. Entire. How much time you have? So as far as the section 80 is concerned, as we are saying now, everything is going to be under if it is everything is going to be under new tax regime. Ultimately, that section 80 amendments or section 80 provisions, they have already lost its importance. Only two we will discuss and then we will move ahead. Basically, the Department of Economic Affairs issued a notification dated 29th of August 2024, providing that no interest would be paid on the balances in NSS after 1st of October 2024. And it is therefore proposed to amend Section 80 CCA to provide exemption to the withdrawals made by the individuals from these deposits on or after 29th of August, for which the deduction was allowed. And this amendment shall be with retrospective, that is retrospective with effect from 29th of August 2024. Similarly, they are bringing a new scheme, that is National Pension Scheme Vatsalya, 80 CCD. It is now proposed to include and allow deduction not exceeding 50,000 for contribution made by the parents or the guardians to National Pension Scheme account for their children on account an account opened under NPS Vatsalya scheme, launched on 18th of September 2024. So for that, they have given the exemption under 80 CCD. How the taxability of that scheme, that is also explained further. The amount deducted along with the accrued interest will be taxable upon withdrawal, subject to certain exclusions and all. So again, this is This amendment is to take effect from 1st of April 2026. Then consistently, as far as the startups are concerned, for last 4 or 5 years, this extension, this particular deduction under ATIC, the timeline is getting extended, and this year also is not an exception. Here straight away they are saying it is proposed to amend the above section so as to extend the benefits for another period of 5 more years. The benefit will be available to eligible startups incorporated before 1st of April 2030. Now coming to the important provisions relating to the rates under TDS and the TCS. The very important one and the welcome change is about the remittances for the education. So remittances made for education, the earlier limit was 0.5% after 7 lakh rupees. Now the remittances made for the education, they have brought out from the TCS net. So now for the remittances made for the educational purpose, there won't be any TCS. Welcome change. Then as far as the interest on securities is concerned, the present limit is nil. From nil, now the proposed threshold is going to be 10,000. Now 194A, interest other than interest on securities. So present limit is 50,000 for senior citizen. Now from that 50,000 for senior citizen, the limit has been increased to 1 lakh for senior citizens. So here I will spend a couple of minutes. So what they are saying is for senior citizens, the threshold has been increased from 50,000 to 1 lakh. But mind you, as far as the senior citizens are concerned, senior citizens are anyway enjoying the benefit of filing the 15H form. So as far as this particular specific amendment is concerned, again, what the CBDT chairman is saying, because of this particular amendment, the deposits in the bank may get 45,000 crore boost. The budget announced a rate of measures and increased the income tax exemption limit to 12 lakhs. TDS threshold for fixed deposit interest income earned by senior citizen will go up from 50,000 to 1 lakh. And these additional limits, because of these additional limits, it will give boost to deposits with the bank. So this I'm not understanding. I'm not a banking expert. But let me tell you, as far as the banks are concerned, as far as the banking in the country are concerned, the bank in the country are facing a major problem of liquidity. Liquidity is not there with the banks. The kind of investments, investment pattern obviously has changed over the 10 years or so, and that is the reason banks are, finding it difficult to get the deposits, and thereby, in turn, there are issues in lending. So, to tackle this issue, whatever concession that we are talking, the aim of the government, this is what they are saying: deposits may get 45,000 crore boost. But because of this amendment, this I'm not able to understand. Now further, the thresholds have been increased from everywhere. For dividends, it was 5,000. Now it is 10,000. For units dividend, it is again 5,000 to 10,000. Similarly, winning from lotteries, earlier it was aggregate of the amounts exceeding 10,000 during the financial year, and now 10,000 in respect of a single transaction. Similarly, for the insurance commission, then income by way of commission, price, etc. on lottery tickets. As far as the rent is concerned, the earlier provisions are 2,40,000 during the financial year. Now, in the finance minister's speech, she said 6 lakhs. So that 6 lakhs is not correct. That limit actually is 50,000 per year. So even if the property is given given on rent for a 1 month also, and if that rent exceeds 60,000, that rent exceeds 50,000, then TDS provisions are going to be applicable. Then 194A, fees for professional services. Again, the limit has been increased from 30,000 to 50,000. Finance Minister said that now I am increasing that threshold to 6 lakh rupees. Then in her speech, I am saying, in her speech, she said 60,000. But as far as the statute books are concerned, statute books are also confusing in a sense. The current provisions are 2,40,000 per annum. And now they are saying it is 50,000 per month. Now they are not talking about annum at all. More than 50,000, 50,000 limit they are saying. So for professional fees, the limit has been increased from 30,000 to 50,000. Welcome. But as far as we all professionals are concerned, those working in partnership firms, the major challenge is going to be the TDS provisions, the TDS applicability from 1st of April, where there will be TDS on remuneration also, partners remuneration. So we all professionals are going to take a hit as far as our liquidity is concerned. Because straight away 10% is going to be the TDS. So we had a discussion on that, but the idea was if concessions are given to everyone, why not to include that provision also, or rather why not to omit that provision? But nothing has been done as far as that particular provision is concerned, which is going to be applicable from 1st of April 2025. So again, removal of higher TDS, TCS for non-filers of return. This provision was brought in the statute 3 years back, I think. When it was introduced at that time itself, all felt that how we are going to check whether that person is a return filer or not. At that time, they said, we will give you mechanism whereby you can check whether he is a filer or not. But see, deducting the tax at source is a great responsibility you are giving to the taxpayer. Then why not to burden, why to burden him more by saying you just check that whether the person is a tax filer or not, and very high rates of 20% were prescribed if he is a non-return filer. So it's a difficulty only, and that's why now after 3 years they are saying yes, it's a difficulty, and we are removing those provisions from the statute. Again, welcome. Then reduction in compliance burden by omission on TCS on sale of specified goods. As we all know, as far as these specified goods are concerned, the limits are there of 50 lakhs. Then both the TDS and the TCS provisions become applicable. And the 194Q gets precedence as far as, as far as the applicability of the provisions are concerned. Now, again, here also they have realized it after maybe 4 years. Now, what they are saying, however, at the time of collection, seller is not aware of the fact that whether TDS has been done by the buyer on such transaction. This results in both TDS and TCS being applied on same transaction. it is therefore proposed to omit the provisions of TCS on sale of goods, and this amendment will be applicable from 1st of April 2025. Again, a welcome change. Then changes as far as, again, welcome changes as far as the charitable trust and the institutions are concerned, increasing the period of registration under 12AB for smaller trust and institutions. So presently, the re-registration of the trust, the duration is for a period of 5 years, means after every 5 years you need to renew that registration. For smaller trust, that is trust whose total income without giving effect to the provisions of 11-12 does not exceed 5 crore during each of the 2 previous years preceding to the previous year in which such application is made, said period of registration is proposed to be increased from 5 years to 10 years. Again, it's a welcome amendment. The amendments are proposed to take effect from 1st day of April 2025. Now, mind you, this provision is for 12AB registration, and it is not for the registration under 80G. See, 80G, I will speak 1 minute on 80G. See, as far as the 80G is concerned, I don't know, but we are facing a lot of problem as far as the approval of the 80G is concerned. We are filing all the documents, but unfortunately, we are not getting a good response, and many a times or other, most of the times, the applications getting rejected. Then CIT rejects your application, you need to go to ITAT, and ITAT remands that matter back to the CIT. Then again, you go to CIT exemption, and then this time you meet that guy, try to satisfy that guy for the registration. So this is the scenario. Now, what I want to bring to your kind notice is we need to educate the charitable institutions that once everyone is going to go under new tax regime, where is the question of 80G? Who is taking the benefit of that 80G now? So, if nobody actually is going to take the benefit, it is some sort of pride amongst those organizations also and amongst the professionals also that we have given 80G, and from their side we have this 80G. But the issue is, practically speaking, what's the use of it? Where everything is going to be under new tax regime, who is able to claim your 80G? So as far as this particular issue is concerned, as far as possible, let us educate our charitable institutions that in fact the importance of this particular section is gone now with the new tax regime limits being enhanced to 12 lakhs. Then as far as the specified person is concerned, see, if you are giving, if you are donating 50,000 rupees or more, then you become a specified person in respect of that particular charitable trust, and the provisions of 13(1)(c) apply. Now, here what they are doing is they are enhancing that 50,000 limit to 1 lakh rupees. Again, a welcome change. An amount from 50,000, they are increasing it up to 1 lakh rupees. So now the new limits are an amount exceeding 1 lakh to such trust during the relevant previous year, on an amount exceeding 10 lakhs aggregate to such trust since the inception of the trust up to the end of the relevant previous year. So these are the new limits. Then rationalization of definition of specified violation for cancellation of 12AB registration. Again, this is a very welcome change. There, for this particular amendment, they are saying it was noted that even a minor default where the application under 12AC is not complete may lead to cancellation of registration of trust or institution, and such trust or institutions become liable to tax on accredited income. It is therefore proposed to amend the explanation to subsection 4 of section 12AB so as to provide that any case where the application for registration of trust or institution is not complete, same shall not be treated as specified violation for the purpose of said subsection. So if it is not complete, there they are saying you must give a fresh opportunity to that charitable trust to make that application again. Now, 5 minutes. Transfer pricing, there is a very, very important amendment, and again, a very welcome amendment. At the taxpayer's option, the arm's length price determined by the transfer pricing officer for a previous year shall apply to similar transactions for 2 consecutive years immediately following such previous year. So that option is now given to the assessee. It's a very, very welcome amendment. The rules and guidelines for implementation of these provisions shall be separately prescribed, and the amendment is proposed to take effect from assessment year 25-26. Then, as far as the penalties are concerned, penalties amendment is there in 270 AA. So I will spend 1 minute on 270 AA. See, earlier penalty, we all know the concealment penalty was under 271 1C. That 271 1C, what happened is after the Reliance judgment in Supreme Court, any claim you make, that is not a concealment. That's what Supreme Court said. So government realized that we are not going to win a single case as far as 271 1C is concerned. And that is why they brought a new penalty, and that is 270A penalty. Now, as far as that 270A penalty is concerned, 270A penalty is straight. It talks about underreporting or misreporting of income. There are very less chances of escaping from that penalty. And that is why there is another section, and that another section is 270 AA. Many times in tax laws, what happens is when the amendment comes, you realize that there is a section to that effect. So this is one such amendment. So let us go through that amendment so that we will come to know the section basically. The time limit for processing a taxpayer's application seeking, very important, immunity from imposition of penalty and prosecution in cases of underreporting of income is proposed to be extended to 3 months from the end of the month in which the taxpayer's application is received by the tax authority. Uniformity brought in time limit for passing penalty order. It is now has to be passed within 6 months from the end of the order in which the order for the relevant proceedings is passed and received by the specified authority. No prosecution for delay in deposit of TCS. Another provision, no prosecution for delay in deposit of TCS where the same is paid before the due date of filing the quarterly TCS returns. So again, these are very welcome amendments. Then as far as the time limit for imposition of various penalties are concerned, then those time limits in fact have been brought down. Now the amended time limits are, by and large, it is 6 months from the end of the quarter in which the proceedings during which action of the imposition of penalty has been initiated are completed. And similar parallel provisions, in fact, they have brought for all the penalties. So we need to keep in mind 6 months from the end of the quarter. So that is the headline. If you want to check whether the penalties have been imposed in time or not, because that is the major area of litigation where the assessing officers are crossing those limits, then that is your opportunity to go into the litigation. Then as far as the updated return is concerned, now they are saying you can file the updated returns up to 4 years. The earlier it was, earlier there were only 2 slabs, that is expiry of time limits available up to 12 months, then up to 24 months. Now 12 months and 24 months, those limits have been increased up to 36 months and 48 months. As far as the additional income tax payable is concerned, that also has increased from 50 to 60 and then 60 to 70. So here I feel as far as filing of income tax return is concerned, ultimately we get the data. Most of the data is we get on the portal by July. And now even belated returns also we can file only up to 31st of December. So 31st of December, it is just a 6 months time available with us. Many times it happens that genuinely the refund claim is there, but the person is not able to make that claim because the time period is just up to 31st of December. So I feel there is an injustice as far as the department is concerned. Department is giving an opportunity to file your updated return because because there they are getting a revenue 25% more, 50% more, 60% more, 70% more. But as far as the assessee is concerned, if there is a genuine case of refund, no condonation they are accepting these days. So in genuine cases also, a person is not able to file his income tax return. When a person is abiding the law and he's ready to pay the penalty, I feel the provision has to be there for filing the return because ultimately he is ready for the compliance. Unfortunately, what is happening in updated return is, you know, that updated return you can't make a claim of refund. And even in genuine cases, a person is not able to file the returns. I think this should be redressed in our new act. So with this, I'm coming to end of the presentation. So this is a time to say goodbye to our Income Tax Act 1961. So a new act is going to be presented in the Parliament. Before presenting into the Parliament, it is moving on WhatsApp. So another controversy people are saying, as far as the Parliament is concerned, it has its own privileges, and how an act can go on WhatsApp when it is not presented in the Lok Sabha. But anyways, the new law is going to come. So again, we professionals are going to learn that new law, but at the same time, we can't forget the old law also, because the litigation is going to continue at least for next 10 years. So for next 10 years, we are going to have in our hands the old law as well as the new law. And we all passionate professionals are going to learn that. And this is what all the professional life is all about. It is all learning and learning. So with this, I conclude. I thank all of you for a very patient hearing, and thanks to the GSTPM and Mahesh sir for this opportunity. Thank you.
Thank you, sir, for your detailed highlights on the budget proposals and your insights into the income tax law. I think can we directly? So I'll request Vikram sir directly if we can move on to the indirect tax provisions. I'll just start your PPT. Okay.
A very good afternoon. President sir, office bearers, seniors in the profession and friends. You were all very happy so far with respect to the budget proposals of the direct tax. But whatever is supposed to be happier as far as direct taxes are concerned, double the burden is going to be there for compliance as far as the indirect tax proposals are going to be there. So actually the indirect tax proposals are never nowadays mentioned in the budget speech, and it is always more like a backdoor entry which is done for most of the proposals. I will go by the clauses actually in the chronology of the clauses given in the finance bill. So the first thing which will affect all of us is the input service distribution amendment. Now you are all aware that if you have more than one same PAN registration, so you have a unit, let's say in Maharashtra, and you also have a unit, let's say in Gujarat, right? And there are two units. Some of the expenditure are common expenditure for both the Maharashtra unit as well as the Gujarat unit. When in respect of services, when you transfer the goods, you always transfer it with tax, okay? Because there was a cross charge and there was Schedule 1 entry, so you had to transfer it. It is treated as a distinct person under 25(4), and therefore you would levy the tax. But as far as the services were concerned, okay, the input service distribution, which was a concept which was also there at the time of service tax. Of course, it was much simpler because in service tax, you were allowed centralized registration as far as the distribution of credit was concerned. Whereas here, each state, so if you have multiple registration, for each state, you can have an ISD number. So input service distribution number, okay? So far, things were going smoothly because it was not made compulsory. Now what they made compulsory from 1st April 25 in the last budget. And when they made it compulsory, what happened was people thought that normally the whole grounds of everybody was that if you have number of employees, okay, and you have a head office in Maharashtra and you have a lot of employees in other state, okay, the entire mediclaim, etc. is taken over here. And so the taxes goes to the Maharashtra, the other states do not get the taxes. So these are the services where they wanted the tax. Okay. Now, therefore, the people normally thought that whatever is CNS will obviously be distributed as I to the respective other states or branches. The government in this budget has come out with a clarification and also the amendment in section 20 of the CGST Act, whereby they are saying that even if you have paid an RCM under IGST, okay, that RCM, if it is pertaining to more than one branches or other than the branch in which you have paid the RCM, then that will also be subjected to ISD distribution, and you will have to distribute IGST as IGST in the distribution of ISD. Another amendment they made was, see, why this happened is because most of the lawyers were moving across the country, and normally the payment of lawyers are being paid as RCM, okay, and that RCM was not available to the respective state. So even the lawyer's fees, now if the lawyer is going to go and argue for Gujarat branch, okay, at Gujarat, then you will also have to transfer the RCM, because RCM was not treated as a supply. It was you had paid the tax and you were taking the credit. But to clarify, they've said that even RCM will be included. So even IGST, if you have taken, and if it is to be distributed, that will have to be distributed.
What people do is they pay the RCM, say for example Maharashtra, then issue a cross-charge invoice with the name of that particular state to send it to that state, because ISD provision was not there. Now with ISD coming in, let's take two scenarios. One is there, this advocate is registered, so he's put it in your 6A of ISD. Okay, will I be able to directly transfer there, or will this have to be transferred to Maharashtra first, pay the RCM, then this same invoice will have to be transferred?
No. See, the first thing is that if the lawyer has ticked and whether he has raised it on the Maharashtra branch or the Gujarat branch. So if it pertains to Gujarat and if the lawyer has raised on the head office, let's say in Maharashtra, then you will have to pay the RCM because it is seen over here, and then pay the RCM and then distribute it to the other. Now, there are going to be a lot of complications because of this. Now, the first complication is that what will happen, cross charge was always there. There are certain ITCs which are in relation to that cross charge. Let's say a marketing team is sitting in the head office over here in Maharashtra, and the manufacturing operations of the products are happening in Gujarat, and the supplies are also happening from Gujarat. Now, the question is that I am raising a cross charge, but the cross charge, when you raise a cross charge, you have provision to section 28, which says that the valuation need not be gone into, and at whatever price you can do a cross charge. Now, with this result, let's say I'm doing cross charge of only 1 lakh per quarter as marketing fees. Okay. Now, actually, I'm incurring 20 lakhs per quarter as marketing expenditure, which is actually distributable to Gujarat as well as Maharashtra, because there are certain things which are manufactured, certain third-party purchases which come to here in Mumbai, Maharashtra. In that cases, what will be the procedure, or how, whether there is no need of ISD because there is a corresponding cross charge. So this ITC is in relation directly to my output service, but that output service is not one-to-one correlatable because you're doing it at a lower amount. Or there can also be an issue, okay, whereby whether you're doing it 1 lakh, here there is 5 lakhs. So on the difference, can there be an ISD? So these are the answers probably you can ask in your panel discussion. No answers as of now. I'm supposed to give you only the provisions. Okay, let's move on. The next change is happened for the vouchers. Now we have the decision of the courts which says that vouchers are actionable claim, and therefore you can't have a place of supply of a particular item which is neither sale of goods nor sale of supply of services. And therefore rightly they have deleted 12.4 and 12.13.4 to say that vouchers are, because they are covered under Schedule 3, therefore never taxable, and therefore, but this is not a retrospective amendment. Please take care. Okay. And if you have paid for whatever reasons, okay, so I don't think you will get any refund. Okay? The tax is gone. But actually that is relatable to FTWZ, not to the general, all the provisions. Okay. Now let's move on. The biggest controversy, okay, safari retreat. Now the question here is that the government admitted before the Supreme Court that it was a mistake of us in drafting, right? It should have been plant and machinery in 17.5C as well as 17.5D. However, in 17.5D, by mistake, we wrote plant or machinery. Okay? So the government is now wanting to rectify that mistake because the decision came against the government. So they are retrospectively amending, saying that it will always be read as plant and machinery, and it is not plant or machinery. To say that I am directly reversing the decision of that, specifically they have mentioned, notwithstanding anything to the contrary contained in any judgment, decree or order of any court or any other authority. So this amendment is directly for the purpose of removing the benefit which you are supposed to get pursuant to the decision of safari retreat in Supreme Court. Now there is one more issue over. Having said this, whether that benefit we are talking about will be completely gone, or there is still a hope, a ray of hope as far as the benefit is concerned. Now 17.5D consists of on own account, right? And it also said for the purpose of plant or machinery. Now plant or machinery has been amended and it has become plant and machinery. For that, that's okay. But the interpretation and the judgment continues for the purpose of own account. So where you have made a mall for the purpose of leasing only, it will not be treated as own account, and whatever ITC is available may still be available. So whether it will still be available or not because of this notwithstanding anything contained in the judgment, or whether you will get it, another issue for your panel discussion. Moving on. See, there was always a provision that when you pass a credit note, okay, the person to whom you're raising the credit note should have reversed the credit. Okay. And there was a lot of litigation which is going on also. We said that provision is applicable only to the recipient, not to me. I have reversed it. अभी उसने नहीं किया तो उसको पकड़ो. I am not responsible for it. Okay. So now they've made an amendment in 34(1) as well as 34(2) to say that you will not get the benefit of passing of the credit note unless that person has reversed it. Now here the wordings are very important because they say that reversal of corresponding input credit in respect of credit note, if availed by the registered recipient for the purpose of reduction of tax liability of the supplier in respect of the said credit note. Now, if availed, now supposing I am not availed, then what to do? The section says if availed only. So there can be cases where you have raised an invoice of 100 rupees. I have negotiated with you and I have booked in my accounts only 80 rupees. Now you have booked 100 rupees, so you will pass a credit note of 20 rupees so that in your books of accounts it is 80 lakh. But I will not accept that credit note because I have already taken only 80 rupees. That's one way of looking at it. Another problem which is coming is that for the intervening period, see, from 1st April 24, if you start passing the credit note, you negotiated, you pass. Now in the IMS system, it is showing the credit note. If you reject it, that fellow tax becomes payable. Okay. So there is no redressal to such kind of situation, at least for the intervening period. They are just wanting to make this IMS system as a supreme system whereby I don't have to do anything. Everything you have to do. You break your head. I am least bothered. All I want is my tax. You go to hell. You do whatever management you want. So there are various proposals which have been incorporated over here simply so that the IMS works properly and the government is no way, nobody can raise and go into the writ petition and say that this IMS system is incorrect, we are facing this, that, nothing. So they're changing the law. Okay, let's move on. Yeah, nothing is there, rules, etc. But it is functional, no? Total law. So another amendment for IMS is, see what happened was in section 38(1), we had the term auto-generated. So why people were not doing IMS? Because I am supposed to get to be auto-generated. मैं क्यों ये exercise करूं? जिसने GSTR 1 में दिखाया उसका to be मेरा जितना है मेरे को दिखा दो, मैं उतना लेके deduction करके I'll file my 3. But now the government has removed the word auto-generate. This whole thing, even 38(2), they are going to make another proviso they are going to add that certain details will have to be filled in by you. Okay. Now, all this exercise is solely for the purpose of IMS and nothing else. Okay. What will happen is now they will remove all this. Now, they've also amended these clauses for the returns and etc. All this also in relation to making rules and regulations for stricter implementation of IMS. Yeah, the hard locking will not be possible. I'll tell you how. See, what happens is now this, why they are doing this is they have removed auto populate. Now your 2B will not be generated. When it will be generated, you go to IMS dashboard. You accept, reject, or keep pending. Now, credit notes you are not allowed to keep pending. Either you accept it or you reject it. After doing all that exercise, if you do that exercise, then only you will get your 2B. Because it is not supposed to be auto-generated. Once you do that exercise, then only your return will become fileable in 3B. Okay. So this whole exercise is for the purpose of ensuring that that IMS thing works. Okay. And therefore, the problem is that they have not given any mechanism. See, today you can download, if there are 500 line items, how are you going to be possibly ticking yes, no, reject, accept, keep pending for 500 line items? You have been given the 2B or 2A on 14th, let's say, and from 14 to 16, there are 500 line items and there are 50 clients. How are you going to comply? Practically, it's not going to be possible for you to comply. So whether, of course, otherwise, if the government does not come out with the software will come out with something or the other. But how it's going to function, that is also not very clear as of now as far as the implementation of the thing is concerned. No, I'm just telling you 500. See, Correct. Now there are SAP. SAP system may you cannot change the invoice. Let's say by an error, 1,000 invoices were wrong. So you will pass 1,000 credit notes. What those 1,000 people will get affected by it. Now, उसको तो invoice ही नहीं मिला, वो credit note कहाँ से accept करेगा? वो reject करेगा. Reject करेगा, इधर liability आ जाएगा. So that's not going to be how practically it will work. We don't know. No, but daily basis में तो invoice आएगा. Credit note रोज थोड़ी कोई पास करता है. So actually accept और reject तो credit note का ही करने का है. अरे जिसका 5,000 है वो भी रोज नहीं कर सकता है, बिकॉज वो जो ट्रांजैक्शन किया है उस ट्रांजैक्शन का इंफॉर्मेशन नीचे तक तो पहुंचना चाहिए ना उसको. स्टेट ने एक ट्रांजैक्शन किया या 10 ट्रांजैक्शन किया, वो 10 ट्रांजैक्शन अकाउंटेंट को कभी मालूम पड़ेगा? रोज सेठ आके अकाउंटेंट को रिपोर्ट करेगा क्या आज मैंने 10 ट्रांजैक्शन किया, इसको टिक कर? ऐसा नहीं होगा ना सर. सी द प्रैक्टिकली यू हैव टू अंडरस्टैंड दैट एट अ गिवन पॉइंट ऑफ टाइम, only after the end of the month, when the systems are freezed, okay, then only you will be able to do.
That GST amount is not filed. Oh, GST amount change.
So, and I don't know whether you will get that IMS daily. Huh.
So it will automatically come into GST. It will replace to it because the same exercise now we are doing on daily basis. So SAP also doing on that daily basis, like Mahindra and big companies. So it is people are doing.
No, correct. People are doing. I'm not saying no, but then for that you need to have the wherewithal. See, even in it does not mean that there is not going to be any error in e-invoicing. There will be error in e-invoicing. You will have to change e-invoicing also. उसके लिए भी credit note pass करना पड़ेगा. Okay, so there are going to be changes. So even after doing daily also, at the end of the year, we'll have to check the whole thing again only. Right? Okay, let's move on. Now, see, they are track and trace mechanism. They feel that they are not able to control the illegal trade, or they're not able to put. There are certain types of trade and industry where they feel that whatever they do, they are still going scot-free. Okay. So therefore, they are going to start a tracking system, barcode, or RFID, whatever they are going to do on the products which they declare. Right. This kind of a mechanism is there in 1 or 2 European countries where you have tobacco. So probably here also tobacco, iron and steel, etc. will probably come over here. And if you don't follow this track and trace system, okay, then you are liable for penalty also under 122. Okay. Now the last clause, huh? No. Okay. Huh. So no. Even that is not possible. So see, we can move step forwards, but it is not going to solve the problem entirely. If that was the case, you did it so much e-invoice वगैरह, so have your J1, J2 का mismatches जैसा things have changed just now? It has not changed. You're still having bogus dealers. So it should have changed, no? Because they brought out the law very nicely. But still it is continuing, and still they want to introduce this system because there also they couldn't hold it. Okay, you're still getting there. So it's, I mean, tu dal mein path. It is like that, Okay. Next, the last and the final one, which is there, is the free trade zone and the SEZ. See, what happened was this was not described in Schedule A, and there were a number of transactions which were happening in a free trade zone or a free trade go down. So you imported and you kept it in free trade zone. Okay, the custom duty was not paid. You sold it to one person, that another person sold it to another person. And finally, at the time of removal, custom duty and etc. was paid. Now, all these transactions intervening before the goods bill of entry for home consumption was filed, the question was whether they are exempt or not. Okay, and there were of course, very good officers who always taxed it. And that's how they have amended this retrospectively. But as usual, if the officer has taxed and you, like a good boy following the law, paid the taxes, you will not get the refund of those taxes. A bad boy who did not follow the law, right, he will get the refund of the taxes because he has not paid it. He will not be liable. So free trade zone, etc. This is a retrospective amendment, a welcome one, because it was supposed to be done long back. But anyway, it is coming in bits and pieces. So that's all for this particular session. If there are any questions, thank you. Thank you very much for a very patient hearing. Thank you.
Yes, बंद कर दो.
Yeah.
टॉप शेयरिंग करने का ना. So thank you to both our speakers today for an excellent discussion on the direct and indirect tax proposals. I'll request Sejal Madam to give a formal vote of thanks.
Very good afternoon, everyone. I think we have no words to say that a bigger thank you to CA Shekhar Patwardhan and CA Vikram Mehta, sir. The insights and the way they have explained the amendments and the budget proposals, especially now to start with income tax. Shekhar, sir, I think that was in depth. We have heard like many proposals till now, but I think you explained each and every point in depth, especially the rent one. I think that 50 lakhs thing was a very important. Yeah, the 50,000 thing was a very important thing, and generally people say that, okay, now till 6 lakhs, it is not exempt, but these are the minor things which only an expert can explain. So we are really thankful for all the insights for the direct taxes. And Vikram sir, thank you so much for the indirect tax proposals and the amendment and sharing your knowledge to us. Thank you so much. I would like to thank our president, all the office bearers and the conveners and all our members for attending this program. And we have two announcements before we depart for today's lecture. We have Gujarati coaching classes starting on 25th of February. So I think this is really a very fruitful step. So you will be learning all the GST matters and everything in Gujarati. So I think I request everyone and even your family members to enroll for it. Then another important announcement is regarding the half-day seminar, which we are going to have it on 21st of February at the Mysore Auditorium, Matunga. The topics are really relevant and very important. The topics are budget memorandum, panel discussion on budget memorandum extract, and importance of IMS. So we have very learned speakers for this. So I request everyone to enroll for that as well. I would also like to thank our chair lady, Sujata ma'am, for being here and gracing the occasion. Thank you so much. Thank you so much. भारत भाग्य विधाता पंजाब सिंध गुजरात द्राविड विंध्य चलया उज्जल जलधि तरंग तव शुभ नामे जाति तव शुभ शिष गाये तव जन गण मंगलदायक जय हे भारत भाग्य विधाता जय जय जय